Brian Grimes, your real estate mentor, back with another action-packed session. Today, we're going to be talking about the secrets of the BRRRR strategy. I'm saving the best secret for last, but this is how you recycle your capital, how you get deals done with very little money out of pocket and recycle your money in and out of deals. So how you can scale up and do multiple deals. Extremely important session. Make sure you stick around to the end. If you're new to the channel, like, comment, subscribe, leave a comment that says I subscribe. For everyone who leaves that comment, I'm going to send you instant access to one of my free real estate trainings. It'll show you how to acquire properties for pennies on the dollar all across the country. You don't want to miss out on that free offer. If you guys are interested, like if you're new, you don't know where to get started, how to get into this real estate game, and you want to learn through one of our programs, we have a couple of mentorship programs. One is our done for you model. That's where we will find finance, rehab, tenant, and manage the properties for you. So it's completely turnkey. We're working with investors from all over the country, even outside of the country. So we have investors from Canada, New Zealand, all the way out like Hawaii, the West Coast, in overpriced markets. And we're tapping them into the cheaper cities like Philadelphia in the Northeast coast where your money can go further. If you want to learn about that, click the links in the description, DM me, email me, text me, however you want to get a hold of me. We also have our do-it-yourself program. If you just want to learn how to do the BRRRR strategy or invest in real estate, recycle your capital in your backyard markets, you can tap into my do-it-yourself program as well. Just reach out and we'll get you tapped into that. And then we have the real estate ride-along. Our next ride-along is this Saturday, March 23rd. We're going to take our mentees on a tour, and these are people from all over the country, of about 13 properties. I'm hoping we can see all of them, but that's actually a lot to get to in a day. All different stages of full gut renovation, and we're just going to round all the bases, show you guys how to build properties for a living. So it's an action-packed event. This one is sold out. We're going to have another one in May. That one's probably going to sell out quickly. So if anybody wants to get tapped into that, come spend a day with me in Philly, boots on the ground. Just reach out, email me, DM me, text me, however you can get a hold of me, and we'll get you laced up with a seat there. But guys, if you have questions, comments as we're going through this, drop them in the chat section, drop them in the comment section. I'm going to power us through this in about the next 20 minutes. So stick with me. Let's get into the mindset. So the mindset for this week is real estate's a game of strategy. Real estate is like chess. It is not checkers. You need the right strategy if you want to win. And there are 101 ways to win in real estate. So there's not just a one size fits all strategy. You don't have to just do Airbnb or whatever somebody's talking about. There are a bunch of different ways, and you should learn all of them. But you do need that right game plan. To me, the BRRRR strategy, if you want to scale up, you're starting with little capital, and you want something that is beneficial from a tax standpoint. You're tired of paying a ton of taxes. You want more tax write-offs, tax losses. You want cash flow. You want to get out of the 9 to 5, and you want to scale up multiple properties in a short period of time. Like I did 300 of these deals in 5 to 7 years. The BRRRR strategy makes a lot of sense, and arguably the most sense from all of those perspectives. And that's why we're talking about it today. But you guys just need to know you're only one strategy away. The strategy that fits you, it can be different depending on where you're starting. If you're starting with very little cash, maybe bad credit, like I got a 500 credit score, I got no cash, you might want to get into creative financing, where you're learning how to get in front of motivated sellers, people who are in foreclosure, pre-foreclosure, and they're going to lose their property anyway. They'll deed them over to you for pennies on the dollar. That can be a great strategy. You can get started with, $500, $1,000, a couple grand, and you can get to where you want to go. Now, if you're starting off with more capital, like 40, 50K, 25, 30K, and you have decent credit and you want to scale up quickly, the BRRRR strategy can make a lot of sense. So definitely stick around, keep watching, and stay locked in. Ask any questions you have, drop them in the chat section, drop them in the comment section. And if you get value, you feel like you're getting value at any point, share the content with somebody else you want to get value. Get them tapped in. So let's talk about the BRRRR strategy. This is how to recycle your capital with the BRRRR method, right? The BRRRR strategy, for those who don't know, it's composed of these 5 stages. One is you buy. You want to buy properties that you can value add. So we're looking for value add deals. These are distressed properties that need renovations. They could be cosmetic, some could be full gut renovation. And the property that you choose is going to depend on what you want to do with it. And we're going to break this down more for you on our Thursday session. I'm actually doing a session on Thursday, the next 5 Thursdays at 3 p.m. Eastern Standard Time, 12 p.m. Pacific, where we're going to be talking about the different stages of BRRRR. So this Thursday, we're going to be talking about the buy stage, everything that's included there. And then we're going to go to the renovate, which is the next phase, how to build the properties, how to full gut renovate them, the different costs involved, the different things you need to think about. Then we're going to get into the rent phase. Who do you rent to? How do you maximize your cash flows? Are you doing Section 8? Are you doing veteran housing? Are you doing room rentals? Are you buying, multifamily and converting them into different types of strategies, group homes? What are you going to do on the rental side to maximize your cash flow? Then there's the refinance stage. The refinance is where you are recycling that capital. So after you buy a property, renovate it, which is the value add piece, and then you rent it out. You get the tenant in, and they're paying the mortgage off and paying you that cash flow that you want every month. The average deal that I'm seeing in Philly that we're sending out to our boots on the ground members and that done for you model, around $600, $700 a month in cash flow on a smaller single family property. So cash flow can be very powerful, and you don't need many of those deals to get 1 foot outside of the 9 to 5, especially with how scalable it is. But the refi is where you pull your money back out. This is that recycling period where now you're going in, and the money that you put into that deal, you're getting back after you monetize the asset with the tenant. So when you execute on that refinance, let's say you put $15,000, and that's kind of a real number that we're seeing, 15 to 20,000 into a deal to get into it. When you refinance out, you're pulling back maybe 15 to 20. Some of these deals, you're getting 100% of your capital out of the deal. And now you have what I'd like to call an infinite rate of return, because if you have no money locked into the deal and you're getting positive cash flow every month, and you're getting tax write-offs and all the things we're going to talk about in just a second, this is an infinite return now. There is no cash on cash return. But I would say on average, maybe you have like $5,000 locked in the deal at the end, but you're getting over $500 a month in cash flow. So that's over 100% cash on cash return. Now, if you can get more than 100% in the stock market, go get it. If you have a better investment opportunity, put your money into it. But if you don't have a safer way to get 100% annual cash on cash return, the BRRRR strategy, it makes beyond a ton of sense, because you're building wealth, long-term assets that are going to appreciate in value and build you cash flow. You can leave them to your family, and you're going to get the tax losses and write-offs. So stick around if you want to learn more about this. Definitely tap into that Thursday afternoon session, 3 p.m. Eastern Standard Time, 12 p.m. Pacific, where we're going to break this down over the next 5 weeks for you guys even more. But the BRRRR strategy is extremely powerful for those reasons, and that's what it is. Buy, renovate, rent, refinance, repeat. So just remember that. Buy, renovate, refi, rent, refi, repeat. And the repeat is when you get your money back, go do it again. Go do it again. Go do it again. Get as many properties as you can before rates get higher. Right now, they're probably going to go lower. So there's going to be a window where you can lock these in on very low rates and get a lot of cash flow out of them for the rest of your life. But just do it while the window is open. Secret number 1. And guys, if you have any questions, drop them in the chat section, drop them in the comment section. We'll get to the questions. I want to power us through this. Secret number 1, there are good locations and bad locations to do the BRRRR strategy. There are good locations and bad ones. So where are the bad ones? Well, the bad ones are typically on like the West Coast. I showed a map on our last live of where the top 10 cash flow cities were. Over 5 of them are in the Northeast coast, the Northeast. So some of the best markets, Philadelphia, top 10 cash flow city. I think it's number 7 on the top 10 cash flow cities in the country. 6th largest city in America. A lot of history there. One of my favorite markets. I grew up there. Philadelphia is great because it fits this model of low taxes. So the good places to do the BRRRR strategy, you want these three things: low taxes, low property taxes, right? You also want low general taxes, because more people will move there to avoid higher tax cities. So they're going to be moving to lower tax areas. But low property taxes, that's a positive benefit, because property taxes eat away your cash flow. There's no other. Can you guys think of another benefit of paying higher property taxes? They just eat away your cash flow. And some of these markets, I've seen property taxes that are $20,000 a year. So even if you don't have a mortgage, you have another mortgage, which is called taxes. So you always want to be in a low tax city, because what do taxes do? They go up. Have you ever gotten a letter that said, hey, we're going to lower your property taxes? Somebody in the Instagram chat said, yeah, my state, California, is the worst. It's the absolute worst. And not to mention the landlord-tenant laws are really bad there to be a landlord. But taxes go up. So if they're already bad, they're going to eat away all your cash flow. You don't want to invest there. Go to places like Philly. I have property taxes that are, $200 a year. You'll see that in Baltimore as well, another great cash flow city. Property taxes, $300-400 a year. Amazing. That's where you want to be, because now you're not giving all your money away and all your cash flow away in taxes. Number two, low cost. I want low property costs. So I want to be able to go out and buy properties for pennies on the dollar. This is why doing this in cities can be more beneficial than doing it in rural areas, because there's more inventory in the city. Therefore, there's more sellers, and you can find an unsophisticated seller, get a property way below the value. We're talking 25, 30 cents on the dollar. I want these properties dirt cheap so that I can value add them. But I also want to be in a city, unlike California or most of these West Coast markets, where the average property cost is like, hey, I can pick them up for 60,000, 70,000, 80,000. Sometimes I tell these guys from the West Coast, hey, yeah, you could get a duplex for 80K in Cleveland. And they're like, what? Are you kidding me? No, you can definitely do this stuff. And then the last thing you want are high rent cities. So even if you find a city where there's low taxes and low costs, if the rents aren't high, there's not enough cash flow to really monetize these assets. So you want a mixture of all of those three things: low taxes, low property costs, high rents. You can get all three of those in Philly. You can get all three of those in Baltimore. Cleveland rents have been increasing over the years because more and more developers are going there. More and more investors are going there. So you can get that in Cleveland too. Those are three of your top 10 markets. Our Boots on the Ground program, where we do it for you, where we find the properties, finance them, rehab them, tenant them, and manage them for you. We're doing that in the Philadelphia market. So if you've been looking for a way to tap into one of these high cash flow, low tax, low cost cities, you can definitely do it with our done for you model. Guys, if you're getting value, like, comment, subscribe, leave a comment that says I subscribe, share the content with somebody else who you want to get value. Let's roll on to secret number 2 and keep the questions coming. We're going to switch over to the questions once we wrap this thing up. We have about 4 secrets, and I'm saving the best for last. The secret number 2, the tax code was written for buy and hold real estate investors. The tax code was actually written for landowners and business owners. Landowners and business owners. As a BRRRR strategist, you are both. You are now a landowner and you are a business owner, because you are in the business of rental real estate. So now the tax code is working in your benefit. When you're an employee, you're just paying whatever taxes are at that bracket that you're in. You're paying the maximum taxes. If you go out and start investing in the BRRRR strategy with this method, so buying and flipping, you can do that and you can create big time value, but you're going to create short-term capital gains, which is ordinary income that's going to be taxed at that ordinary income rate. So it's going to get hit hard. With the BRRRR strategy, there are so many tax benefits. One is ghost depreciation. So you're going to get write-offs just straight line against that property. But you can also do things called cost segregation analysis. You can get a cost segregation study from a qualified CPA firm that deals in real estate. And what this will allow you to do is bonus depreciate your property. So you can accelerate the depreciation of your property to the point where, let's say on a $250,000 house, which is like a small single family starter home, you might get $30,000, $40,000 of tax losses in year 1 through bonus depreciation. And these bonuses may get refreshed as we get into 2025. They may get replenished. So now you get even more tax losses. So you could do this strategy, create massive amounts of cash flow, and pay essentially no taxes, because you're getting tax write-offs for the property taxes, the mortgage interest, all of these different fees, but then you're getting bonus depreciation. And if you start doing this full time, you have a spouse that is working, you could get such big tax losses from the BRRRR strategy that pass over to your spouse. If you're a real estate professional, if you can qualify for that, you can now wipe out your spouse's income, get massive tax returns. I've seen people get 6-figure tax returns from the BRRRR strategy. And this is why it starts to crush other strategies. There are a lot of talking heads out there that are talking about how their strategy is the best and it beats everything. And when you start talking about taxes, they get quiet. They get completely silent, because this strategy crushes every other strategy. So if you hate paying taxes, this is another reason to get into the BRRRR strategy and get on the right side of the US tax code. Number 3, as market conditions continue to improve, you'll be able to cash out refinance. So we've talked about cash recycling, getting into a deal, putting in 15, 20,000, which these are real numbers, guys. Like you can put in 15, 20,000. You can take on a lender, use OPM, and they will give you all the rest of the money to purchase and renovate the properties. But in the right markets, and the markets are returning here as rates continue to tick down. Rates have been going down. I think like the last couple of weeks, they're going down, and they're going to keep going down as we get into 2025. When they get into that sweet spot, and I'll tell you guys where the sweet spot is in the breakout session that we do on Thursday. But when we get back into that sweet spot and lenders start getting more comfortable again, and the market news is really positive again, and everybody's feeling the love, you can do 80% cash out refinances on these deals, which means every property you build, you might make $10, $15, $20,000 in a cash out refinance. So when you go to pull money back out in the form of a 30-year mortgage, that's when you do that refi, you're going from a construction lender, a hard money lender, or a private lender, and then you're getting a 30-year mortgage. And that 30-year mortgage, they're going to do at 80%. The construction loan, they're going to do at 65%. So there's a 15% spread. On a $300,000 deal, that's like $45K. Like that's a big spread. You might pocket that 15, 20K that you put into the deal, you get it back. Then you take the other 20, put it in your pocket. You're getting paid to build properties now. Once you start getting paid to build properties, now you're like, well, how many of these can I build? Because if every property I'm building, I'm making 10, 15,000 on the exit, and I'm still getting the cash flow and keeping it. It's almost like flipping houses to yourself, which is where this strategy starts to crush everything. I'm here to tell you guys the market is going to return to this point. It was there in from 2011 to 2019, 2020, it was there. Everything's kind of gotten out of whack for obvious reason. We had everything kind of shut down for the global pandemic. Now we're getting back into a range where everything's going to come back into action, and there's going to be a window where the people who are locked in on this BRRRR strategy can go out and grab 20, 30 deals in a year, stack up a ton of capital. And the one thing I didn't mention about that money is it's tax-free. When you do a refinance, a cash out refinance, if you flip that property to yourself, refinance that money out, and you get your hands on $20,000 of cash out, it's all tax-free. Because it's in the form of a mortgage, there's no tax on that money. So take that and multiply it by 10. If you did 10 deals in a year, which you could easily do, I could do 10 deals in a quarter with, blindfolded, with my hands tied behind my back, right? So you guys, if you learn from our DIY course, or you just let us do it for you with our done for you model, if you're getting paid in the cash out refinances, 10 of those deals, you're up 200, $250,000 tax-free. And that's money that you can take to go reinvest and recycle into more and more deals. So you can see how just getting started, rounding the bases a couple times, you're going to put yourself in a position to continue to accelerate. I mean, it's very powerful. So just know that you can get paid to build. We'll talk about that more in the Thursday sessions. Secret number 4, there are specialty lenders, and this is the most important secret, specialty lenders that will work within the space. And some of them will offer 100% leverage. 100% leverage means they give you 100% of the money to purchase and 100% of the money to renovate, to rehab the property. All you pay is like the friction, the closing costs, the transfer taxes, the little bit. And that's how you're able to come to this deal with $15,000 or less sometimes, especially as you have experience. They're going to give you more capital, bigger credit lines, allow you to do more deals at once, 2, 3, 4 deals at once. But those 100% lenders, if we connect you with those lenders, which is what we do within our done for you model, now you have 100% leverage to go out and purchase, renovate, rent them out, refinance these deals, and repeat the process with a construction team that's kind of set up for you in our done for you model. And you have the lenders behind you. These are national lenders. So even if you're doing deals in a place like Philly, as you graduate, you kind of grow up, you learn the process by seeing me do it for you. You want to go do it in your back market. You take the lending relationships, you take all the relationships there, and you can go execute even in your backyard. So having these relationships, doing a deal with a national 100% lender, one of the most powerful ways to scale. And you guys know I'm all about scale. That's why I did 300 deals in 5 to 7 years. It wasn't because I did 100 deals a year for 3 years. It was truly scaling. Year 1, 3 deals. Year 2, 8 deals. Year 3, 50 deals. Year 4, 100 deals. It's about scaling your way up. But the only way to do that is with the right lenders, private money, hard money, community lenders. There's so many lenders, and we'll break that out when we get into this refinance and repeat section of the Thursday session. So guys, hopefully that helped you to understand the BRRRR strategy, some of the secrets out there, why you need to reposition your mindset to get tapped into the strategy right now, because as rates fall, it's going to open up this window of opportunity where you can actually get paid to build properties. It's the most insane experience you could have when you're actually building houses, collecting cash flow, and you're getting paid to do it. I mean, it's ridiculous. It's the most insane opportunity, I think, on the planet. And it's why you guys need to learn more about it and try to get yourselves into it. Let's shift over to a couple questions. I'll take a few questions, and anything that we don't get to today, we'll definitely cover on some future sessions. I got one question. Hey, Brian, is the refi usually simple or a bank sometimes hesitant? No, the refi is simple, and it's not the banks that are hesitant. You need to talk to the right lender. So there are specialty lenders. They're called portfolio lenders, and they lend on these types of deals. So they will do what's called like a DSCR loan, where they're not basing the loan on your personal credit score. It's not, well, not your credit score. They are basing it on your credit score, not your debt to income ratio. So they're not going to look at your debt to income ratio and say, you know, you already have a couple properties, we're not going to do it. They'll lend on, 100 deals a year to you or your LLC. It doesn't matter to them because they're just packaging the debt and selling it to other investors who are investing into that debt as well. So they just want to make sure the property cash flows. As long as the property cash flows, there's almost always a lender that will take that deal. That's what they're looking for, because you're doing all the hard work. If you're going out and finding the deal and you're renovating the property and you're putting the tenant in place and it's cash flow positive, well, they're stepping into a stable deal. So there's always specialty lenders that will do these deals at reasonable interest rates, and you can get cash flow. They'll even cash out, refinance you. So it's definitely good. One question we got: with so many choices of real estate entry, how do you choose? I think you choose based on you. Talking to somebody like me who knows all the strategies can be helpful, because I can take you and put you into a bucket and say, well, you're starting here, your credit score is here, you have this much capital, so this is the best strategy. But ultimately, no matter what strategy you start with, you're trying to scale up to strategies like the BRRRR strategy. You're trying to get to this level, to the level of experience and resources and relationships where you can put this whole model together and recycle your capital. This is the most powerful strategy, in my opinion. There are other wrinkles of this strategy, but ultimately this is the most powerful one. So how you choose is, one, you have to educate yourself. You need to understand what options are out there. You might need to tap into, if you're not ready for like our done for you model, you might need to tap into a real estate ride along. Come out, spend a day with me, pick my brain, look at properties, learn how to build properties for a living, see the real estate operation, learn how to invest out of town. It all is going to start with your education first. And you're tapped into the ride along. I got your 24/7 cash flow hoodie. So, well, another one actually. So we'll see you on Saturday and we'll talk more about it. But that's where you start. Education. The more education you have, the more opportunities you can see. And then you can get guided. If you have mentorship, you can get guided to the right strategy. If you don't, then you need to try to figure it out. But real estate is not a game that I would recommend trying to figure out. This is a game where you just want to get tapped in. You want to tap into mentorship because mistakes cost a lot. Trying to figure out the BRRRR strategy cost me millions of dollars. Not millions of dollars that I've had either, but just bleeding out money through deals and figuring it out, recycling capital, recovering, doing better on this deal, losing over there. You guys don't need to go through all of that pain. There's not a lot of value in that pain. The only value in the pain is the knowledge that I've acquired. But if I'm going to give it to you for pennies on the dollar, then you should just take that, learn it as we're doing it for you, as we're guiding you through the process, and then take all that money that you would have lost trying to figure it out on yourself and reinvest that into real estate. Because your family is depending on you to make wise decisions. Your family would prefer that you got educated in some type of a course or a mentorship program than going and getting burned by general contractors, getting screwed over, throwing away their inheritance just to figure this out for egoic purposes at the end of the day. You're much better off, your family and generations of your family that are depending on you to acquire this real estate before America becomes a renter's nation. They're depending on you. I'm telling a lot of you guys, you're going to be 80 years old. You're going to get smacked in the back of the head by the grandkids. Why didn't you buy that property? Why didn't you listen to Brian? Why didn't you figure it out? Why didn't you tap in when the properties were that cheap? You mean you could have got one for 80K? It's 800,000 now. They're going to smack you in the back of the head. So you're definitely going to pay attention. Michael Morgan said, Brian, hey guys, as a fellow mentee, you won't find another mentor who will not gatekeep, but who will give you all the value and some. I mean, and that's the truth. I'm here to help, guys. If I didn't want to help, I wouldn't be here. I could be building more properties. I could be doing a lot of other things, but I'm here because I want to help you guys. It's an important mission. Somebody asked me recently, Brian, why do you do this? Why do you help people? What's in it for you? And I told them, listen, here's my selfish agenda. I've already built hundreds of properties in neighborhoods, communities that I grew up in. And I had a couple of decisions to make after doing that. One, I could go out and just build more properties and be selfish and just do it on my own and have a scarcity mindset. Or two, I could have an abundance mindset and I could go out and build more developers and have more national impact. My goal is to teach 100 developers or hundreds of developers or thousands of developers that can now go back into their communities and rebuild their communities. That gives me more of a national impact, but it also allows us to rebuild the hood, rebuild the communities that we grew up in. This is our mission. Don't complain about how your neighborhood looks. Do something about it. Step up, learn, and create generational wealth while you're doing it. It's so important. Thanks, Mike, for sharing that. And the last question I'll take is right here. In BRRRR strategy deals, should you focus more on the major components, plumbing, HVAC, and less on the cosmetic? In BRRRR strategy, I think as you get better at this, the better you get at this, the more you look for deals that need more work, because the work stops intimidating you. So you start to find the cosmetic deals are okay, but the profit spreads are less because less people are intimidated by cosmetic rehabs. So your average person who's watching HGTV, they think they can pick up a hammer and go do a cosmetic rehab. They think they can figure it out. And maybe they can figure out a lot of it on YouTube in terms of like how to actually put down flooring or hang some drywall, things of that nature. When you walk in a house and the roof's blown off and the bricks are falling out the side and there was a fire damage or the whole basement's flooded, a lot of people get skeptical. That's where the experienced developer comes in and it's like, no problem, I've done this. This is no big deal. But what it allows you to do is for the seller, you can negotiate the seller down on that burnout property, on that property where the roof is collapsed. I can now negotiate down the seller extremely hard and just say, look, best I can do is 45K. Take it or leave it. Nobody's going to buy this thing. And they're like, yeah, he's right. So now you get that property for 30, 40, 50,000 and the ARV is 250. I have a $200,000 spread. Now I can go and put 100K into it and then refinance all my money out, cash flow it. Those deals can make a lot of sense. The cosmetic deals are faster though. So if you find a cosmetic renovation that only needs 50, 60 grand, and you can do that in 10 to 12 weeks versus the full gut renovation, which is more like a 20-week process when you're pulling the permits, the city slowing you down, all that stuff. You can do more deals in the same amount of time. So if I can do 3 deals cosmetically versus 1 full gut renovation, I might do the cosmetic. I might go that route, especially if I want to stack up a lot of deals this year. So it's all about strategy. Once again, this is chess, not checkers. You need the right strategy to win in this game. You need the right game plan. And that even will come into what renovation project you take on or don't take on. Because some people are in a hurry to get into deals. I'm usually not in a hurry to get into a deal. I want to get into the right deal. So I'll take my time and be a little bit more patient. So guys, hopefully this helped. If you got value, like, comment, subscribe, leave a comment that says I subscribe so I can send you instant access to that free training. If you're interested in our Boots on the Ground program where we finance, rehab, tenant, and manage properties for you, DM me, text me, click the links in the description. You can book a call with me and my team. We have our real estate ride along this Saturday coming up. That's going to be epic. I'm going to have footage for that. We'll drop it for you guys. The next one is in May. It's going to be a bit of a celebrity event, in my opinion. It's probably going to sell out quickly. So make sure you reach out about that and grab your ticket. That one's going to sell out faster than I think any ride along that we've had. And it's going to be absolutely epic. Tons of deals going on. We might have 15 properties to get into. So if you want to reach out, if you want to know the cost, all of that stuff, tap at right now. I will tell you in terms of the cost, it's on sale right now. We have pre-order tickets going down for the May ride along. So if you get a pre-order ticket, you get more value because we're throwing in different types of course content into it. And the cost is 50% discounted, which is why this thing is going to sell out extremely fast. So make sure you reach out, DM me, just DM me ride along and we'll send you all the information, the links, the sign up links and everything. You'll tap in, you'll get your 24/7 cash flow hoodie, or we might have like the crew necks in May because it'll be a little bit warmer. So we'll get you guys some gear and spend the day with you. It's going to be absolutely epic. And if you just want to learn this game, if you're like, Brian, I don't really want you to build houses for me in Philly. I want to do this in my backyard. Or do you work in my area? I work with mentees in every state except for Alaska. So almost all 50. Just reach out. We'll get you tapped into the DIY if you're a do-it-yourselfer, but you just want to learn. You don't want to make all those costly mistakes, and you want to accelerate very quickly. But you just don't want us to do it for you. You actually want to get your hands on it and just take it on your own. We can get you tapped into that. Hope that helps, guys. Brian Grimes, your real estate mentor, tapping out. I'll see you guys on the next one.